I have received the company financial statements from my accountant, and that document says that my company has made a big profit. But when I look at my company's bank account, the money is definitely not there. Where is it? It's Diana here from Havoc Accounting, and this video today is to unpack the 3 reasons why this happens, and also how to make sure that you're not caught off guard, that you know exactly where the money goes. This is a very common question, so please don't feel like you're the only one that is asking this. There's many other videos I'm sure around about this. The reason number 1 is the timing. Chances are you get these reports in March or April, but they're dated 30th of June. And of course, when you look at the cash balance now, it's going to be completely different. A lot of things have changed, right? You're not going to know what has changed just by looking at the 30th of June accounts. You definitely need more information. The second most common reason is connected to your earnings as owner of the company. There are money that you take out of the company that are part of the net profit calculation. For example, your wages, your superannuation, your bonuses, or director's fees. But there's other things that are outside that. For example, your dividend paid, or anything else that you have taken out of the company that most likely is sitting in your director's loan account. So that's reason number 2. And the third reason is that realistically there's always going to be a mismatch between the net profit and the cash regardless of the timing, because it's different calculation. So the net profit is calculated based on the invoices to your customers, invoices from your suppliers. And that's not necessarily going to be what you have paid or what you have received. And also there's other things that are not included in the profit that you have paid out. For example, your loan repayments, or if you have bought a large piece of equipment, it may be in your assets and not necessarily only a portion of that will be shown in your profit as depreciation. So we saw that there's multiple reasons why there's these differences. And of course, nowadays, things change very rapidly. And as a business owner, if you see that your company's cash account is getting lower and lower, you need to know very quickly why this is happening. So what can you do about it? Well, you can work with your team, either your internal or external team, to first of all make sure that the accounts are updated frequently, and that you also receive financial information from your company more often than annually. For example, every 3 months or every month, depending on how quickly things change within your business. You can also ask your team to give you a cash flow report that shows exactly what has happened to the cash. And it can be a simple report that just shows the cash at bank, the net profit, and then all the other movements that we talked about. For example, any dividends paid, any loan repayments, any movements to things like receivable or payable, so that you know exactly where the money has gone. Business owners shouldn't wait until they see their bank account getting lower and lower to get these reports done. Of course, you want to set up these procedures when things are going well, so that you and your team have the mental space to set up all this. And then as you review things, as you review these reports, if things are happening in your business, if there are some issues, you can see them as they happen and act quickly to resolve them. I hope this video is useful to you. Please send the link of this video to someone who you think may find this video useful. Thank you.